Good morning, everybody. It's 8:15, and welcome to Coffee Talk number one, brought to you by the Florida CFO Group. I'm here this morning with two of my partners, Marylean Abney, who's in Tamarack, Florida, just near Fort Lauderdale, and Deane Barron, who's in Longboat Key near Sarasota. I'm Phil Nahajewski. I'm in Windermere, Florida, near Orlando. And I'm happen to be a big fan of David Letterman's top 10 list. Ours is a 15-minute show, so I'm only going to have time to do some top three lists, but I'll open with one and close with one. Our top three list to begin the show, top three reasons we're doing the show. Reason number one, it's fun, and many of us are at the age and stage of our lives where we only do things that are fun. And the challenge of trying to cram meaningful content into a 15-minute window, to me, it's something fun to do as we share our coffee with each other. Reason number two, we, the Florida CFO Group partners, love to share our insights with people, with anybody who will listen to us. And today we're going to share our insights on raising capital. And reason number three, we especially love to share our insights with business owners who pay us. Yes, this is a marketing tactic. I'll be transparent about it. Our hope is that there'll be business owners listening to these broadcasts and realizing that they'll be able to grow, optimize, and protect their business much more quickly and effectively by adding a partner from the Florida CFO Group to be a fractional CFO on their leadership team. So that's enough of marketing. Let's get to the intros and the content, because that's going to be the heart and soul of the show. The heart is going to be great content from experts, and we in the Florida CFO Group have 25 seasoned CFOs with a diverse mix of expertise. So the heart of the soul will be the content. The soul will be sharing our backgrounds and our insights, because I know I find that fascinating, and I think you will too. I was going to share my background with you all, but it's interesting, whereas we have so much diversity amongst our professional journeys to get to where we are today. Marylean and I met each other because a common acquaintance made the observation that we followed pretty similar career journeys. So, Marylean, why don't you tell us about yours?
Hi, Phil. Thank you. Thank you, everyone. So I met Phil, as he said, through our mutual network, and we hit it off instantly, right? We both had common backgrounds and common philosophies on helping companies be successful and achieve their goals. We both had worked in large public companies and had very similar careers in finance. Our passion for the Florida CFO Group comes from the mutual excitement about using our 30 plus years of experience and knowledge to help large and small companies to now focus on small and medium sized businesses that could benefit from our experience but can't afford full time CFOs like us. Instead, we're confident that we'll be able to add tremendous value by being a strategic fractional CFO. We know how to work with businesses, and we know how to work with your bookkeepers and your controllers on the day to day transactional work. But what we do is we take that data, we analyze it, and we assess your business. A great CFO can tell you about your operations by asking the right questions, listening, and collaborating, and also looking at your financial statement history. So we partner with the CEO and help them be even better at achieving their goals. We enjoy looking back and saying, well done. We helped this company grow profitably and achieve its goals. Deane, tell us about your experience raising capital.
Thank you, Marylean. I'm also a partner of the Florida CFO Group, and I was previously a vice president of finance with a software and technology company that grew from 10 million in revenue to 400 million over 8 years. We were successful in raising capital from venture capital, private equity, various lenders, and the public markets to support the growth. Raising capital starts with telling an interesting story and explaining industry and market trends. Competing in segments of the market that are growing faster than the market overall can lend excitement to the story. In presenting the plan, describe the key customers or customer groups and how your value proposition satisfies their needs. Identify why your business will maintain and grow market share over time. Show how you stack up against your key competitors and their current initiatives. Describe the revenue model in as simple terms as possible. Investors like to hear about volume in units multiplied by price to explain revenue. The story then can be about how you will sell the number of units over time, coupled with the pricing plans you have over the same period. Recurring revenue is often valued more highly by investors. This can be from subscriptions that extend over time and from maintenance agreements. These revenues are perceived as more sticky and less likely to be lost to competitive forces. So break these out in your revenue plan. Use metrics that are useful in running your business. Focus on gross margins and percent gross margin, and show how the cost of sales and margin will change over time. Identify the most important vendors in your supply chain to show that there are low risks in that part of the business. Investors will want to understand the investments in fixed assets and in research and development. Show how those investments increase capacity to support business growth and how the launch of new products and services will impact revenue over time. Explain how you will manage those programs to minimize risks. Show off your executive team and the experience they have in the industry. Identify previous employers, the roles that people have had, and the experiences and accomplishments that they've made to give confidence to the investors in their ability to deliver on your plan. Explain, many investors will only move forward with a team that they are confident in being able to manage the curveballs that often come to our businesses. In developing the financial projections, start with the audited financial statements, then base the forecast on recent actual results and use cash flow metrics like days receivables outstanding and days payables to forecast working capital. Identify what it takes to get positive cash flow from operations.
So, Deane, how do you pick an investor?
Well, pick someone that has experience in your industry if you can. That way you won't have to spend as much effort in educating them about your business. Also, consider their capacity to provide more financing beyond the initial request. When you are successful in delivering on your plan, you may need additional funding, and working with a current investor can be easier.
So, how do you build a relationship with an investor?
Well, provide reports on the business on a regular basis and periodically meet in person and over video. Show the progress against the plan that was originally provided to them. Answer questions that the investors have on a timely basis, and don't hesitate to pick up the phone to explain something. When the unexpected happens, communicate early. It's important that they hear it from you rather than from someone else. Trust is earned over time, and strong relationships are key. Marylean, can you help us with your experience on capital raising?
Well, yes, Deane. First of all, you have tremendous experience in this area. I mean, that software business growing it 40 times in 8 years is very, very impressive. So my experience raising capital is in corporate America primarily. We would tell our story to the board of directors to get them to approve a project. And once we'd done that, they would decide whether we would use equity or debt to fund that investment. I've also had experience with small startups that have to also tell their story to high net worth individuals, venture capitalists, or potential lenders. I can echo what you said. All investors are looking for the same validation that there's a return on their investment. Credibility is key. Providing examples of past successful projects where you delivered on your promises is very key and goes a long way with investors. And picture this: you get $5 million from your investor, and a year goes by, and you have to provide them an updated story. So now you have to tell your updated story. What do you say? You can have two stories. You can say, okay, unfortunately, we didn't land the customers. We had quality problems. The volumes didn't materialize, and we had competitors that we didn't know about. Or you can say, we hit the ball out of the park and delivered on all of our promises, and the results speak for themselves. Now I want 25 million. Which story will get you the 25 million? I think it's story number two. Phil, tell us about your experience raising capital.
Okay. First of all, good job, Deane and Marylean. What I was going to say is probably what you said, but just a little bit differently. To me, raising capital is about raising confidence, and you do that two ways. One is by having experienced financial leadership on your team. Investors are going to want to know that the capital they're parting with is going to be strategically allocated and effectively managed to get the results. So just having experienced financial leadership on your team goes a long way. I got into the tech startup thing about 9 years ago. I caught the bug. And my first experience, we raised $8 million through private investment when I joined the team. And at that point in time, I thought, yeah, that's the secret sauce, experienced financial leadership. Since then, I've helped about 10 different startups with a variety of levels of success. And what I really learned is that experienced financial leadership alone is not enough. It takes demonstrated traction. And by the way, an experienced financial leader can help you get that, because instilling the financial disciplines that we may have learned in corporate America or in mid-sized businesses, establishing the metrics, the budgets, the review cadences, the corrective action plans, the accountabilities, the things that we do really help drive traction as well. But it really takes a combination of having an experienced financial leader on your team and showing the ability to demonstrate traction to get the investment flowing into your enterprise. If we have any questions from the audience, I know we didn't leave much time for answers, but please type them in the comments field. Even if we get to them after the broadcast, we will use the comments field on the post on our LinkedIn page to give you your answers. And if you want to connect us with us, FloridaCFOgroup.com has all our contact information. This is the first of hopefully many weekly coffee talks. Thanks for being with us for Coffee Talk number one. I promised a second top 3 list for this broadcast, and I thought it'd be best for all if we were to, each of the three of us, recap in one sentence, a recap of our raising capital tip of the day. Deane, number one, please.
Raising capital can be an important way to add a key stakeholder to the business.
Very good. Number two, Marylean.
Raising capital is about marketing your business and demonstrating your knowledge and understanding of how it will succeed.
Very good. And I get to do number three. Raising capital is about raising confidence. And that comes from having an experienced financial leader on your team and showing you can demonstrate traction. Okay, very good. I'll pause we have, I think, 40 seconds to spare. If anybody wants to type in a question, we may be able to get to it. But let me just thank the audience for putting up with our learning curve here of doing our first LinkedIn Live show ever. We hope to do one of these every week. We may take Christmas week off, but thanks for joining us in the broadcast, and we'll see you all next Tuesday morning. Have a great day, everybody.